I'd like to welcome everybody to another live sessions. Now, everybody knows me very well. I'm a licensed financial advisor from the past. Uh, been a financial advisor in the UK. Also been a market analyst now for approximately 6 years. I've been a trader for over 10 years, ladies and gentlemen. Now, these sessions it have a clear purpose. We're going to look at live analysis. We're going to be analyzing some of the most traded financial assets around the world, such as the Nasdaq, the Dow Jones, the US dollar, of course, and even also other assets which may not potentially be directly influenced by today's inflation data. So that's what we're going to be looking at today. But the purpose of today's live analysis, ladies and gentlemen, is that everybody has a clear understanding of what's driving the price, where indications are, what the signals are. In terms of the indications, what is the signal determining in terms of where potentially we can be placing our orders, our pending orders, our take profits, stop losses, and trading stops. So everybody's able to plan to fully understand what's driving the price, what potentially may change the trend, and also to fully understand where there's the key support and resistance levels. So by the end of the webinar, I want people to fully understand what's driving the price and how to prepare for today's news release. Of course, today we're looking at inflation data, the Core PCE Price Index, which is related to the US, but also not just today, but also to be able to plan for the week ahead as well. Because, of course, next week we've got key employment data such as the JOLTS job openings, NFP Friday, and some of the most influential stocks such as Microsoft, will be releasing their earnings data on Tuesday and Wednesday. So there's a lot of things to talk about, and I want people to fully understand how potentially the price is going to be driven, where signals are, where opportunities potentially may materialize. So that's what we're going to be looking at as part of today's analysis. Now, the announcement is going to take place in exactly 7.5 minutes. So I want people to fully understand the background of what's driving the price so far, because a lot of people have been speaking to me throughout the week, because we do a live analysis uh, every single day on our blog, and every single day we're confirming and looking at signals. We've given a lot of signals and take profits to take advantage of downward price movement. And of course, ladies and gentlemen, in terms of the Nasdaq, and of course, a lot of people have been saying to me, what's driving the price? Why is the price declining? Because throughout 2024, it's been an amazing year. 2023 was also an amazing year for the Nasdaq specifically and growth stocks. So, what's driving the price down? And the scenario, ladies and gentlemen, is slightly changing. What's changing? There's three things to take into consideration. Number one, we had news last week that the US will tighten restrictions on the semiconductor sector. So, of course, this massively affects AI and it massively affects chip makers as well. Now, if we look at the Nasdaq is massively exposed to the semiconductor sectors, such as Nvidia, such as Broadcom, such as AMD, for example, as well. There's a lot of companies, influential companies in the Nasdaq, which are collapsing because of these potential restrictions. In addition to this, for the very first time in a very long time, we're seeing both the employment and the economic sector for the US decline and slow. And also, in addition to this, we've had major companies release their earnings data, which have disappointed. Now, I can give you some examples of these, ladies and gentlemen, because we've still got 5.5 minutes until the announcement is made. If we look at the Nasdaq's most influential companies, these are the Nasdaq's most influential companies, ladies and gentlemen. So we've got, for example, Apple, we've got Microsoft. Microsoft, for example, will be releasing their earnings data in a few days. They'll release their earnings data on Tuesday after the US market closes. But if we look at these most influential stocks, most of them are chip makers or significantly related to AI, which is massively influenced by chip makers. So it's all directly influenced. And if they're going to restrict that sector of the market, if that does indeed materialize, then that's a big issue for the Nasdaq, ladies and gentlemen. This is why the Nasdaq has declined almost by 9%. Yes, we've seen some positive price movements over the last 24 hours, but it's not yet enough for us to get a confirmation that, okay, that was the retracement. To be honest, if we lose momentum, downward momentum now, the retracement is 100% a traditional retracement. It's really following the characteristics of previous retracements that we have seen in recent times. So we're not going back more than a year, for example. But we need more upward momentum in order to get confirmation that indeed that retracement has lost momentum, and we can start looking at take profits and opportunities for the correction upwards. So that's something for us to take into consideration. But of course, at the moment, if those restrictions do materialize, then it's affecting the most influential stocks. So here we can see it's ranked because depending on the exposure the Nasdaq has to that stock, of course, it makes it more influential. Now, we don't want to look at these stocks all the way down here because they've barely got any influence. For example, these are making up 0.13% of the Nasdaq, so not much influence at all. Whereas if you look at Nvidia, definitely a semiconductor. If we look at Broadcom, the same. If we're looking at, for example, Adobe, AMD, for example, as well, QComs, these are all sectors significantly related to the semiconductor sector. And of course, when we're looking at that, ladies and gentlemen, it's if those restrictions do materialize, then that's a big issue for the Nasdaq. And we're going to look at those targets as well. If we are going to get a decline, where can we enter trade potentially based on signals such as breakouts, such as Fibonacci's, and also where can we be placing our take profits and stop losses? For example, we can use support levels and resistant lines. So that's something definitely for us to take into consideration, ladies and gentlemen. But the scenario at the moment is that if we're looking at the Nasdaq, we're definitely looking at a downward trend. Like I said, even though today we've had some upward price movement, uh, that also may be to a certain extent related to the price, because as the price declines, there is advantages to purchasing at the discounted price. So we need to take that into consideration as well. That potentially, partially, may be one of the reasons why the price in the stock has increased. We also can take into consideration that yesterday the US gross domestic product was significantly higher, so that could increase the risk appetite of the market, in which case that can prompt shareholders to hold on to shares to try and earn higher amounts of profits and so on and so forth. But nonetheless, we're still looking, ladies and gentlemen, at lower lows. If we look at the lows here, we have a low, we have another low, we have a double low there, ladies and gentlemen. If we look at this low, and if we look at the latest low, consecutively, every single time we're looking at lower lows. If we're looking at highs as well, the highs, ladies and gentlemen, even though we've got upward price movement, if we're looking at the upward price movement from the start of today's trading, at the very height, it was 1.15. Now, 1.15 is quite a lot, by the way, for before the US session even opens. Now, we need to also look at potentially if that's related to the inflation data or maybe the increase in exposure to the earnings data, which is going to be released next week. So definitely that's something we need to look at as well and take into consideration. But now, like I said, we're still looking at ladies and gentlemen, even though we got that 1.15% today upward price movement, we're still looking at a lower low. So that's definitely something we need to take into a lower high. So that's still so far indicating upward downward price movement. But we're going to look at the inflation data. The inflation data, ladies and gentlemen, will give us further confirmation of how the price potentially is going to move. And by the way, if, ladies and gentlemen, people have questions, because the announcement is just about to be made in a few seconds. If you've got questions, if it's regarding gold, the Nasdaq, the Euro USD, of course ask, and of course we'll look at every single asset. And ladies and gentlemen, keep in mind that everybody is able to trade with zero swap fee. So no overnight fee, ladies and gentlemen. Now, if we look at the most influential data, potentially that's actually something very negative for the stock market, positive for the US dollar. Because keep in mind, a lot of people they concentrate on inflation and core inflation and the PPI, but if you look at the Federal Reserve and the monetary policy, the most important thing is actually the Core PCE Price Index. And if we're looking at the Core PCE Price Index over a year, it's increased. It's actually higher than previously expected. It hasn't declined. If we're looking at monthly inflation, ladies and gentlemen, even though oil prices have declined this month, if we're looking at monthly inflation, the month's inflation has come in double that which was previously expected. So potentially that could even be positively negative for the stock market, even negative for gold potentially. But this is something we're going to look at in a moment now, ladies and gentlemen. So if we look at the Nasdaq, let's go over to a 1 minute time frame for the very moment. If we're looking at the Euro USD, you can see the Euro USD, it shot downwards. So you can see here on the 1 minute time frame, it shot downwards. So that's in the favor of the US dollar. But now it's retraced back upwards. It's not really that high just yet. We're not necessarily just yet got a buy signal. This is the breakout level, ladies and gentlemen. If we're going to break above this level here, then potentially that could be an indication of upward price movement. But that would also be conflicting based on the inflation data that has been released. The inflation data which has been released, ladies and gentlemen, I've got some questions here. I'll answer these while we're speaking. If we look at the inflation data, traditionally it's in favor of the US dollar increasing in value. Now, the only thing I will say is that certain experts and certain analysts gave an indication of zero point 0.1, whereas others gave an indication of zero point 0.2. So it's 50-50 if it's actually in favor of the US dollar or not, because it's higher than certain expectations, whereas other analysts actually gave an indication and were expecting zero point 0.2 to be the confirmed figure. So we've got mainly price movement against the US dollar, not much price movement just yet. We're not crossing above this level. If we cross above that level, then we can potentially take into consideration if there's going to be upward price movement. But let's very quickly look at the Nasdaq. The Nasdaq's declining, ladies and gentlemen. So before the announcement was made, at this price here. So we're currently trading below, based on before the announcement was made and based on today the price right now. So it's mainly downward price movement for the Nasdaq so far. If we look at the S&P 500, ladies and gentlemen, it's more or less unchanged. If we look at the Dow Jones. Here, if we look at the Dow Jones, again, it's more or less unchanged. So I'll confirm to individuals where potentially we're going to get signals for this. Before we start looking at signals, though, I want everybody very quickly to look at gold and gold's reaction. If you look at when the announcement was made, the announcement was made exactly 3 minutes. If we're looking at price of gold here, at some point it was trading lower, at some point it was trading higher. Not guaranteed yet. It's more or less again trading at the price prior to the announcement. Again, like I said, the announcement came in line with certain expectations, depending on what analyst you're following. So, for example, if you're looking at Citigroup, if you're looking at Jefferies, the announcement was in line with those experts. But at the same time, yes, if we look at other experts, it was higher than expected. So let's step by step now get an understanding of where potentially we're going to get indications of upward price movements. So here, for example, ladies and gentlemen, we're looking at the Nasdaq. Now, if we're looking at the Nasdaq, we'll start off with the Nasdaq. Some people here saying, should I trade the Nasdaq? Should I trade the Euro USD? Other people here saying gold, buy or sell. We're going to look at both Euro USD and gold, of course. Now, let's start off with the Nasdaq, though. The individual is saying, should I trade the Nasdaq or Euro USD? Of course, I can't answer that question. You can't compare in terms of swaps because hopefully everybody's trading on the swap free account. You can trade with us swap free. But what I will say is, if you're going to compare the Euro USD in terms of volatility in the Nasdaq, volatility is quite healthy on both. But in terms of the fees, such as the spread cost, it's much lower if you're looking at the Euro USD. So there's advantages to that, of course. Now, if we're looking at indications, we've got two lines here. We've got a 75 bar exponential moving average, which is the red moving average. Now, this is a trend line. People can say, why is that the trend line? If I go back even years and years, you can see this is a very well honored trend line. So, for example, look at this. A lot of people here may have been saying it's an upward price movement. People are buying the dip. We want to take advantage of that. Whereas me, and looking at this setup, I'm actually saying, you know what? Yeah, there is some upward price movement. There is opportunity to look at short term buy and long trades to take some short term profit taking. But we're below the trend line. And you can see it went up to the trend line and then just collapsed and saw an even stronger collapse, to be honest with you. So that's the trend line. Here we've got a 100 bar simple moving average. This is what is known as it's a very well known sentiment line. So we've got the trend line and we've got the sentiment line. Now the price is far below both. Now, in addition to this, we're also looking at here the upward price movement on the RSI is also forming what is known as divergence. So that is a concern as well. And we're also trading below the 50 on the RSI. So here we've got indication that sellers are controlling the market. We've got an indication that we're in a downward trend, and we've got an indication that we've got poor sentiment towards the price as well. Now, of course, at some point the trend will change, but we need to ask ourselves what is needed in order to make investors and the market confident and to have a high enough risk appetite in order to buy the dip, because we really need to look at what they believe is the true intrinsic value of the asset and how they think the price will drive. So we're going to look at signals now. If we're looking at this setup, ladies and gentlemen, there's a bias towards downward price movement because we're below the trend line, we're below the sentiment line, there's divergence on the RSI, and we're trading below the neutral on the RSI as well. But we need to look at where there's going to be opportunity. Now, if we're looking at the 5-minute time frame, we can see so far upward momentum is key. So there is a scenario here, ladies and gentlemen. If we go back to the 2-hour, there is a scenario here that in the medium term, there's certain scenarios of profit taking, which is absolutely fine. Now, if we're going to look at certain scenarios of profit taking, this is the main resistance point. So before we even start to look at the fact that the Nasdaq may have a super upward trend because earnings are going to be higher, there's going to be 2 potential interest rate cuts by the Federal Reserve this year, there's going to be elections, and so on and so forth. Before we even take that into consideration, this is the first area of concern. So that's going to be the first target if we're going to get upward price movement. Now, if people want lower risk appetite, take profit, because that's exactly at the resistance point. When we're trading, it's not art, it's not you're drawing between the lines. It may not honor that 100%. So people, instead of that, they can look at, for example, taking advantage of 75% of that, it could be 80% of that, and so on and so forth. Now, if we're looking at how much price movement there is until then, we're looking at just over 1%. So a lot of people would look at, for example, 70% of that. This is just an example, and that's just the first target, of course. So that's, for example, 70%. So it's just below the resistance point, just to be safe, just in case we're not able to gain enough momentum to have that much upward price movement. And like I said, doesn't mean that's going to be your only trade. After that, and by the way, this is the Fibonacci, very key levels. Before I've even put the Fibonacci on the chart, I put this blue line for a potential target, ladies and gentlemen. Now, if we look at the Fibonacci based on the swing high and the swing low, you can see is at that exact area, the 38.2, that exact area. So you can see everything which is done is based on strategy. It's based on theory. That's a resistant level. I'm going to look at 70% of it just to be safe in case there's not enough momentum. So that was the first target. After that, though, if we keep gaining momentum, then there's additional targets here. So for example, we have a target at the 50. Some people look at the 61, some people look at the 65. It's down to you, ladies and gentlemen. People have different preferences. Now, though, of course, this is the main resistance point here, ladies and gentlemen. So again, a lot of people will be concerned about this level here because that's both support and resistant levels there. So again, people may look at 70% of that rather than try and earn based on the whole of the impulse wave and price movement. So those are targets, ladies and gentlemen, for upward price movement. When though is there enough momentum to signal that? Because here, ladies and gentlemen, we've got a high, we've got higher highs, and the latest lows, ladies and gentlemen, are all higher. So we've got higher highs and higher lows. The only one which was a concern was this here. But again, we've got a price rejection pattern here. If we look here, ladies and gentlemen, we're above the 100 bar simple moving average. So again, short-term indications, ultra short-term indications of potential upward price movement. So what can we do to see if there is indeed going to be upward price movement? You can look at, ladies and gentlemen, the price movement and the volatility levels after the announcement. After the announcement was made. Now, if we're going to go to the 65, so at this green line here, ladies and gentlemen, I actually draw the change the color of the line actually to make it clearer for everybody to see. Here, ladies and gentlemen, we have an indication of potential upward price movement. So if upward price movement continues above this 65 level, then that's an indication that we will indeed get a signal of upward price movement. And then at that level, you can start to speculate an increase. And again, like I said, we looked on the 2 hour to potentially where we can aim up to, which was approximately at this level here. So this is an entry level that you can take into consideration. But keep in mind, if this red candlestick declines below here, then we no longer have higher highs and higher lows. That's a lower low being the most recent, especially if we go into another candlestick, tends to hover around here like this and then declines. That's a clear lower low, especially if it goes below this level here as well. Because if it goes below here, ladies and gentlemen, then we've definitely got a very strong lower low. And also at that point, we'll be below the 100 bar simple moving average. So that is definitely something which will indicate a completely different price movement. Now, where is there a signal for downward price movement? If we break below here, which by the looks of it, we're about to break below there, then you've got a signal of downward price movement. And don't forget the bias in terms of the 2 hour time frame is that sellers are controlling the market because we're below the 50, we're below the trend line, so the indication's a downward trend so far, and we're below the sentiment line, so poor sentiment as well. So that's something we need to look at. We also need to look at other things as well, ladies and gentlemen. Here, for example, we can look at the global performance of the stock market. So if we go to performance of the day, there's a couple of things I want to look at. Number one, ladies and gentlemen, gold is very high. So I don't know really there potentially if we're looking at a lower risk sentiment, that will be negative for the stock market. But I'm going to keep monitoring that. If that increase, because at the moment it's up 79, if that continues to increase, that could be a sign that potentially stocks may be pressured. Especially if both gold and also the US dollar is increasing in value. We've got the US dollar here. At the moment, it's hovering above and below at the moment. Now, what I want to look at is the VIX. Now, the VIX here, ladies and gentlemen, is very low. The VIX here has declined 3.47%. Now, when the VIX is declining, it normally signals upward price movement. Okay, so that normally signals upward price movement. If we look at the global stock market, the Dow Jones is up. The German DAX is also up as well. Let's look at the Nikkei 225. The Nikkei 225 is S&P 500 up, Dow Jones up, Nikkei 225 up, the Euro Stoxx 50 is up as well. The French CAC is up as well. So the global stock market is trading higher. So the VIX is lower, indicating upward price movement. The global stock market is increasing as well. So there potentially we have indications that the price is going to increase in value throughout the day. Now, if we look at the most influential stocks, which have been declining days after days, is consecutively every single day declining, we can see almost everything is green here, ladies and gentlemen. So if we look at the most influential stock, there's a theory that look at everything above 1% value. 1% exposure to the Nasdaq. So that's 24 stocks here. If we get the calculator out, there's a theory that if 70% of the most influential stocks are increasing in value, that's an indication of a buy. So if we've got 24 stocks, and out of those, two are decreasing. So that's 22, ladies and gentlemen, over 24. So that's 91. 91% of the most influential stocks are increasing in value. If we look at Nvidia, a lot of upward momentum. Semiconductors basically are rebounding. If we look at AMD's rebounding, if we look at Broadcom rebounding, Nvidia rebounding as well. So here, ladies and gentlemen, we've got also additional indications of upward price movement. But there's something which is key here. The US session hasn't opened yet. This needs to keep on increasing in value if we're going to get such signals maintained. Now, the only other thing I would also mention is bond yields. Let's look at bond yields. Bond yields 0.31% lower, 31 points lower. Lower bond yields is positive for the stock market. So even though we've got up and down price movement, really, ladies and gentlemen, of course, keep in mind that, and we've got a signal here so far, keep in mind that until the US session opens, all those factors such as the VIX, the performance of the global stock market can change. At the moment, though, we've crossed to a lower low. The signal was here, ladies and gentlemen. So since the signal, we've already declined 0.08%. So short-term traders probably have already hit their take profit. A key, though, area, a very key thing, ladies and gentlemen, is that we're going to decline below this sentiment line. That's a very key thing, ladies and gentlemen, if that buy signal is going to be maintained. In terms of the stop loss for downward price movement, key stop loss is just above the double top because you want to allow some volatility. So that's the double top there, ladies and gentlemen. So that's a key stop loss level as well. So we've got kind of conflicted signals. There's fundamental factors indicating upward price movement. At the moment, technical indications mainly downward at the moment. Of course, both of those ideally need to be in line one with the other. And now let's go back to the 2 hour and let's look at the Euro USD because I've got a lot of people looking at the Euro USD. Some people here are saying, how do I install EMA 9, 20, and 200 on MT4? It's the same as MT5. You go to Insert, Indicators, Trend, Moving Average. So you click on that. And you want a 9 EMA. So if I go to 9, so period 9, you want it an EMA. So that's exponential here. You click and you can see that line appears on the chart. You just do that again and again and again until you have your 9, your 20, and 200. Let's now look at the Euro USD, guys, to get an indication of price movement there as well. Of course, a key factor for the US dollar at the moment is, of course, that there's going to potentially be the main pricing is that there's going to be a cut in September. There's also going to be a cut in December. That's the current market pricing. Let's look at the Euro USD. So if we look at the Euro USD, we're actually at a major resistant level. If we find resistance here, potentially there's a slight head and shoulder pattern, not a very clear head and shoulder pattern, but this is a key resistant point. I would struggle, the price is struggling to break above this level. So it's down to you if you feel comfortable trading that the price is going to break above here. If it does break above it, then fair enough, that's a different scenario. But at the moment, it's trading below the trend line, trading below the sentiment line, and we're trading above on the RSI. So we have very clear conflicting signals there, ladies and gentlemen. Also, we're at a major resistant level. So that's definitely something where you've got a very clear neutral signal, neither a signal of buy or a sell there. Now, somebody here has asked, I can see somebody here is asking for a tip on how he can improve his analysis of currency pairs. Now, we don't give a device or anything like that. This webinar is, of course, here for educational purposes. Now, as an experienced trader, I've been a financial and market a financial advisor as well. There is certain theories which massively helps with the analysis of currency pairs. Most people will look at the Euro USD and say, I'm analyzing it as one asset. There's benefits to not analyzing it as one asset and analyze it as three separate assets. What do I mean by that? So yes, you've got the Euro USD. Okay, that's one asset. But in addition to that, analyze the US dollar as a single currency. In addition to that, analyze the euro as a single currency. Because then you're analyzing the Euro USD, the euro individually, and the US dollar individually. Now, if you're speculating that the US dollar is going to increase in value, number one, the US dollar index should be having buying indications as well. So this is the US dollar index. The US dollar index at the moment is above the sentiment lines and above the RSI. Yes, there's no clear buy signal there because it's moving sideways, definitely finding a lot of resistance there. It's struggling because we've got upcoming interest rate cuts happening, ladies and gentlemen. So, of course, that's the scenario of the USD. It's not the scenario of every currency, though. And you would do the same with the euro as well. Also, what you can do, ladies and gentlemen, if you go to FinViz again, and you go to futures, you go to performance of the day, it shows you the performance of the currencies. So the worst performing currency today, ladies and gentlemen, is the Japanese yen. The best performing currency is the Australian dollar. So, ladies and gentlemen, if you want to speculate that the US dollar is going to decrease in value, there's benefits of doing that against the best performing currency. You don't want to be speculating the US dollar is decreasing in value against another currency which is also underperforming and also weak and also declining as well. You ideally want one currency increasing, one currency decreasing, so there's no conflict there. You've got a clear direction, you've got a clear line of influence, and you have clear indications from both currencies in terms of price action. So that's something for you to keep in mind. If you look at the euro has seen slight gains, not significant gains, but slight gains. Is plus 13%. US dollar has seen slight declines. So nothing major there, ladies and gentlemen. Whereas, for example, if you're looking at the Australian dollar against the Japanese yen, which is the weakest performing. So, for example, if I go to a 5-minute chart actually, and we look at Australian dollar, which is the best performing of the day, against the Japanese yen, which is the worst performing of the day, and we put this on our 5-minute chart, you can see, look at this lovely upward price movement throughout the day. This is today, by the way, guys. If I bring it slightly further forward, let's go to a 6-minute time frame actually. There we go. So a 6-minute time frame. We've got most of today's price movement. Look at this lovely upward price movement. Very clear. Higher high, another higher high, another higher high. Retracements were very clear. We're still technically out of retracement here, but it's starting to lose momentum, should we say, the upward price movement. But you can see here that the benefits of looking at one decrease in currency, one increase in currency, rather than looking at two struggling currencies. So, for example, if you're looking at the USD against Japanese yen compared to this, let's switch to USD Japanese yen. It's not such a clear price movement. Okay, so here, for example, you've got the latest high, the latest low is here, the next low is actually here. So we no longer are technically in an upward trend here. So you can see the advantage of looking at clear performing currencies, predictable price movement, predictable assets. Now, before we continue, last asset that we'll look at, unless anybody else has recommendations. Somebody says here, how can I learn? Ladies and gentlemen, if you go to our website and register, we have almost 18 webinars every single week in over 6 languages. So if you register for our website, we have every single week free webinars for you. In addition to this, ladies and gentlemen, every single week in certain regions, we have trading courses every single day with a live expert as well. So you have webinars, you have daily market analysis, you have live analysis like this, and also you have courses as well. Now, somebody is saying if we can start to look at the gold. If we look at gold against the US dollar, we won't look against the euro. I think this is what everybody wants to focus on. Here, ladies and gentlemen, we're trading below our trend line, below our sentiment line, and below on the RSI as well. But we're looking at upward price movement. So the thing we need to be cautious about is that resistance here, ladies and gentlemen. Now, there's two scenarios because we've got upward price movement. It may lose momentum straight away, okay? If we lose momentum straight away, it's going to lose momentum here, okay? Now, here, ladies and gentlemen, if we look at the Fibonacci, actually, let's zoom in, I think, so everybody can see it clearer like this. If we look at the Fibonacci levels, the 61.8 is here, so at this red line, okay, let's get rid of the Fibonacci. This is red line is where the Fibonacci level is. So if we get a decline and it gets enough momentum to cross below here, that's the area where we've got an indication of downward price movement. So that's where we have our indication here from Fibonacci. And that would also be in line with our trend line, sentiment line, and the RSI. Now, though, if it breaks above this level, this resistant level, then at that point we have indication of upward price movement. At that scenario, it would be a weaker signal because we're below the trend line and sentiment line, but we would be above by that time of the neutral level of the RSI. So we have a slight signal there for upward price movement. Where would we aim for? Very simply, our trend line here. Now, again, a lot of people won't aim directly to the trend line, very simply because we aiming for that trend line, it may not reach it. So sometimes, yes, it passes it, sometimes it doesn't reach it. So for example, this is a retracement, it didn't reach the trend line. So some people wouldn't want to aim for the whole trend line. So for example, this is where the signal would be. The upward price movement, ladies and gentlemen, 0.60. Some people look at 70% of that. So for example, people will be looking at approximately plus 40%. So that's exactly, should we say, about here. So rather than aim for there, they would aim for somewhere down here. So we're aiming for approximately 0.40%. If people want to be ultra risk averse and look at lower scenarios, then of course that's something they can take into consideration as well. What people can also do, if we do get that upward breakout, we can look at our Fibonacci areas. Now, these larger Fibonacci areas are too far away for short-term trading if people want to look at short-term. But again, you can look at Fibonacci, in which case it's giving you the 123.6 here. That's a potential first target for you to take into consideration. So that's something individuals can look at. Otherwise, if we get downward price movement, if it crosses below here, then that's a signal for us to take into consideration. Ultra short term, people can look at the resistance level, in which case it's here, or look at the price rejection level here. Or again, people can use the Fibonacci to get slightly further away, take profits. So that's something for everybody to take into consideration. We've looked at gold, we've looked at the Nasdaq, we've looked also, ladies and gentlemen, at the Euro USD. Let's go back to the Nasdaq because we haven't looked at the Nasdaq for a little while now. More or less at the same price movement we were looking at before. Slightly risen. It was down here when we were previously speaking. We said there was factors indicating some upward price movement. Like I said, the VIX has significantly declined. 91% of the most influential stocks are increasing in value, lower bond yields as well. Since then, it has slightly increased, not by much, I wouldn't say, but it's increased by 0.15%. So hopefully people were taking that into consideration and monitoring that. But again, the real volatility, ladies and gentlemen, is going to come as soon as the US market opens. Now, we're going to end today's session If anybody has any questions, feel free to ask now. We're going to end the session because we've been speaking for 40 minutes now. We've looked at potential signals and the indications on the most traded assets, ladies and gentlemen. We've also looked at fundamental factors as well. We've looked at the core PCE price index for individuals hoping for a strong upward price movement for the Nasdaq. It was higher than ideally those individuals would have liked it. People were looking for a very strong decline, straight away decline. It wasn't quite high enough as those individuals would have wanted it as well. Now, if anybody has any questions, feel free to ask now. Somebody here says, don't sell unless it hits the resistance level. Now, you want to be cautious here, ladies and gentlemen, because we're trading CFDs. We're not building a portfolio. Building a portfolio, the short-term volatility is not so important because it's longer term. We can hold on to the trade as long as we like, and so on and so forth. Now, here we're trading. It's short term. Looking at CFDs, it's a different scenario. Now, if you're selling at the resistance level, it's not always so simple. Why? Because, ladies and gentlemen, if you're selling at a resistant level, you are very simply selling against the trend. Now, if the trend doesn't change, that will put you in trouble. Whereas it's a different scenario, for example, if you went to the resistant level and then just stayed there for a very long time, just struggled, couldn't cross above it, and then people started to panic, should we say, then that's a different scenario. You've got indications there. But if you're looking at a very strong upward price movement and then you get to a resistant level, unless you've got a signal that going to be a decline, are you comfortable trading against the trend? Okay, so that's something for you to take into consideration. Somebody here says, how do I set pending orders, especially on the mobile app? It's easier to place pending orders on the MT5. It's very simply a right click, and you've got a sell limit here, and you've got more pending orders there. So you've got a pending sell and a pending buy. So that's the easiest option if you're on the computer. Now, I can't show you the mobile app because, of course, the live is being done from my computer. But what I will say is if you speak to the support team, our support team is available 24 hours a day, ladies and gentlemen. So if you go to our website, register, send the support team a message. It's not a robot, it's a live individual. They will show you step by step exactly how you can open a pending order on the mobile app. Now, I can't see any other questions, so let's end today's session. Hopefully, you found it educational and informative. Good luck, everybody, because the US session is going to open now very soon. So, volatility, of course, is going to change. Very important thing for us to keep monitoring. The last thing which I will say is, of course, you want to monitor the most influential assets here for the Nasdaq if you're looking at the Nasdaq. Also, you want to look at FinViz, which will show you the performance of the global stock market here, specifically the VIX as well. Ideally, you want the VIX to decline as much as possible if you want the stock market to increase. Otherwise, it's a completely different indication. And also, we can look at US bond yields as well. Lower bond yields support upward price movements, higher bond yields support downward price movements for the stock market. So that's the last thing I'll say, just as a very quick reminder and conclusion. Enjoy the rest of your day. Enjoy your weekend. Do not forget you have copy trading and can copy other traders if you wish. You can even do so and keep control of your account. So if you don't agree with them, you can close the trades closer. You can keep trades open. So there's still elements of education and your own trading and decision making that you can take while copy trading. You can trade with zero spreads. You can trade also with no overnight fees. Always, we have live webinars, a lot of educational material. You have one-on-one sessions, you have account managers, you have courses, and you have live webinars as well. That's always there to assist in terms of education. Let's call it a day for the time being. Enjoy the rest of your day, enjoy your weekend, and hopefully we will see you very soon on our next live analysis or our next webinar. In the meantime, though, goodbye.